Welcome to the Female VC Lab podcast. I have Kimberley here. Kimberley, in one line, give me your name, your title, and the name of your fund.
I am Kimberley Nixon. I'm founder and managing partner at Open Venture Capital.
Thank you for that. What inspired you to become a venture capitalist or an investor?
I actually started out as a real estate investor, just building my own portfolio alongside my career. And in my last two roles, they were PE backed and VC backed. And through those roles, I spent a lot of time understanding the works and the inner workings of private capital. I spent a lot of time with our board and many of our investors and could see the ways in which they could impact portfolio companies beyond just being a check. And I believed that with my background as an operator and a pool of capital, I'd be able to be a value add investor for early stage companies as well. So I decided to take the leap using both my background on the real estate side and my background on the operating side to start my own fund.
That's awesome. What is your thesis and kind of the motivation behind Open Ventures thesis?
I've spent the majority of my career in the health and wellness space across brands like Under Armour, Manduka Yoga. I was COO for a startup called Health House here in LA. I spent some time consulting at Headspace and Tonal. And so I really came to understand consumer and consumer wellness very well and decided that was the area that I also wanted to focus on for my fund. The health and wellness industry is poised to be about $6.5 trillion in market size by 2030. And there are some very clear areas of growth, key drivers, and some very large gaps as well. And so I spent a lot of time studying what those opportunities look like, both from a gap side and then underserved communities, areas where there were large TAMs, and started to pull together the key drivers that I wanted to focus on for the fund. Some of those are conventional: sport, fitness, food, nutrition, access, digital health, mental health, sexual health. And some of those are social determinants that you may not think of immediately, like mobility and economic empowerment, advocacy, and adherence to medical protocols. And so with those, they amount to about 23 different drivers. I am now pretty focused in terms of industry and areas of growth, and now looking for the products and services and those founders that are building solutions to serve these communities.
That's wonderful. Much needed, much, very important. I had no idea the market was that large. $6 trillion.
Yeah, but that's the thing about health and wellness is everyone's pathway is very unique. And so when you look at it, it includes everything, right? Including beauty, it includes wellness tourism, it includes, so it's very large. And thinking through the areas that I want to focus on, obviously it's not all of those. I don't focus on beauty, for example, but the sentiment is clear that consumers are much more focused on how they can continue to be in good health, how they can support preventative protocols for health. And there's a large shift happening in spend towards preventative versus acute care. And that's where we want to focus as well.
Wonderful. So what are you currently learning or listening to or reading these days?
I have spent my entire career focused on research and strategy. I started my career as a management consultant. And when I moved to health and wellness, I was the head of strategy for a footwear brand first, or footwear department of an athletic brand first. And so I still really approach my thesis, my research from a trends perspective. That means I'm spending a lot of time looking at consumer behavior through earnings calls, transcripts. And actually, I've been listening to a lot of history podcasts because consumer behavior is how it shifts over a period of time is such a key insight. It's such a really interesting way to think through how you break through areas of hesitation or reticence, where we've seen pivots, where we've seen innovation breakthroughs really happen. And so studying the shift in consumer behavior, both historically and then now real time, and then what we envision will happen in the future is a big part of the way I spend my time and do my research.
That's wonderful. In 2 years, when we're talking, bonus question, everyone knows what this one is. How do you see venture capital or investing having changed or evolved in 2 years?
I can tell you what I hope for. And
Yes.
that is, and this is not an original thought, this is something that came up over a lunch with a number of other VC fund managers over the last couple of weeks, which is there are a lot of new fund managers in this space. We will see some drop off as fundraising has become more difficult and dollars have dried up. But what we really need on the other side of these 2 years are success stories. We need to see
100%.
a lot more founders of
Exits.
color and diverse founders exit and make it to
We need
be
way more exits.
succeed, and valuations that are on par with their peers. We need to see more funds and fund managers led by diverse managers that have large dollars of assets under management. We need to be able to see performance numbers that support what we all believe and know to be true, which is that diversity is a great addition to the ecosystem. And so my hope and what I envision is that we will start to see those successes start to come to light in the next couple of years. Maybe it takes a little bit longer given where we are in the cycle, but that's what we need to see.
But you know what, that's a good insight, because if you get up to the AB, if you get to the B, you can really break out, and all the statistics prove that. And the construction of your team helps with that, and those statistics prove that out as well, as far as more revenues, as far as exiting faster, as far as the value creation. It's all there.
That's right.
So all the statistics are there, but I agree, to get them to that level where they can then break out and have that
Yes.
have those big exits. Because if they get to the B, the exit's going to happen. It's statistically, that's how it happens, even across the other.
Correct.
Other
And we're at the point in
companies.
the cycle where it's easy to leave everyone on their own to handle things as valuations
Well, no.
and fundraising harder. But what I'm really getting at is like, we need to actually double down on the effort to get folks to those Bs and to the Cs
100%.
in order to.
They've got to get there, or else, like you said, the fund managers will disappoint. Like the fund managers will have a hard time getting the fund to fund through, which
Exactly.
is like, that's a different, no, that's a part of the conversation as well. But I like that we need to prove the value. Like we've done this value creation, and now here we go.
Yes,
Can be done.
it will be done.
Absolutely has to be done. We have no choice. Kimberly, how do people contact you?
You can reach out at hello@openventure.capital. That's a general email inbox that myself and my team manage, or you can find me on LinkedIn, Kimberley Nixon, and there's an extra E in there between the L and the Y. So just to make it a little bit difficult for you. But either way,
do some research.
Yes, do a little bit of work. My parents said, do a little bit of work. So,
There you go.
But I'm pretty responsive.
Thank you, Kimberley Nixon from Open Ventures, for being my guest on the Female VC Lab podcast.